Okay, so we've been looking at the balance sheet of Hasbro, and we've noticed that they state that on this day, December 30, 2018, they owned $5.2 billion dollars of various things, things such as inventory and equipment, and even some intangible things like brands and trademarks. So the focus of this video is to find out where they got the money to buy all these things. And we know from the accounting equation that assets are equal to liabilities plus equity, which tells that it tells us that there's only two ways to fund the acquisition of assets. Either you get the money from liabilities or you get the money from equity. Liabilities can be thought of as different forms of debt. These are claims against the assets, and they represent what the company owes to other people. In Hasbro's case, they have $3.5 billion dollars that they owe others. And shareholders' equity for Hasbro on this day was $1.75 billion dollars, and this is the amount that the company has raised by selling stock, plus any profit that the company made and didn't distribute or pay out to their shareholders. So we're going to look at these sections, liabilities and equity, both in more detail. But first, we need to notice that when you add them together, they're equal to total assets. And this is what we mean by being in balance. So the accounting equation for Hasbro is $5.26 billion dollars of assets is equal to $3.5 billion dollars of equity, of liabilities, pardon me, plus $1.75 billion dollars of equity. And every balance sheet that you look like will be just like Hasbro's in this way. So now let's take a look closer at liabilities. We can begin with current liabilities. And just like in assets, the first group of liabilities are called current liabilities. And we designate them current. And Hasbro is telling us by putting them as a current liability that these are things that need to be paid within 1 year. These are debts that the company owes, which will be paid in the near term. And the first one is short-term borrowings. And this represents things like lines of credit and other short-term debt instruments that the company is using to manage the ebbs and flows of its cash cycle. Accounts payable is next, and that's what the company owes for the goods and services that they've received but not yet paid for. In this case, Hasbro has received $333 million of services for things like raw materials, manufacturing, shipping, TV advertising, etc., for which they have not yet paid. Just like it's common for Hasbro to extend trade terms to their customers, the same thing happens in reverse. Instead of paying cash immediately when Hasbro receives goods from their vendors, they're typically allowed 30, 60, or 90 days or some other period to pay for the services and goods they receive. And in the meantime, the amount that they owe is recorded here as an accounts payable. Next is accrued liabilities. Accrued liabilities is what the company owes for goods and services that they've received but not yet paid for. It's similar in this way to accounts payable, with the primary distinction that the company has not yet been invoiced or received any other confirming documentation. So wages are an example of what you might find in this section. If Hasbro pays its employees every 2 weeks and December 30th of 2018 falls in between the two pay periods, then employees are owed 1 week of wages at the date of the balance sheet. The other things that you might find in accrued liabilities include accrued interest and taxes. In Hasbro's case, they have $931 million of accrued liabilities on December 30th, and that's almost $1 billion. So we might be wondering, what on earth could all this be? And to answer that, we need to check the notes to the financial statements, and we'll find that in Hasbro's case, this amount is made up of the remaining amounts that are due for an acquisition that they made of the Power Rangers brand, and severance charges related to layoffs, among other things. So now let's talk. So now we know that Hasbro's current liabilities are 1.27 billion, and we're wondering, is that a lot? And should we be concerned that Hasbro has more than $1 billion worth of bills coming due? Well, first we can look at the change from the prior year, and we can see the current liabilities is roughly the same amount that they had at the same time last year. And next, we can look at current assets. Now remember, these are the things that can be converted to cash within a year. And when we do this, we can see that Hasbro has over $3 billion in current assets, which is $1.8 billion more than their current liabilities. And the difference between current assets and current liabilities is called working capital. So I hope it's obvious that we want to see that working capital is positive. We want the company to have assets that can be turned into cash, exceeding the amount of bills that they have coming in the near term. And in fact, we like to see it not just a little bit positive, but it's nice to have a bit of a buffer here as well. So Hasbro, with $3.1 billion in assets and $1.27 billion in liabilities, has $1.8 billion in working capital. Based on this, we wouldn't be necessarily concerned about the company's ability to meet its short-term obligations. Now, continuing down the liability section of the balance sheet, we see long-term debt. Now, long-term debt represents loans, notes, mortgages, and other forms of debt that are due in more than 1 year. That's why it's not inside current liabilities. And Hasbro has $1.69 billion of long-term debt. Now, other liabilities is a catch-all for miscellaneous debt and other long-term obligations that are not debt. And sometimes you'll find in this category things like customer deposits, pension obligations, employee benefit plans, capital leases. In the case of Hasbro, we can see that they're reporting $540 million almost of other liabilities, which is about the same that they had in the prior year. And in notes to the financial statements, Hasbro explains that this is primarily income tax liabilities, pension obligations, and some amounts that are owed on foreign exchange contracts. There's also an obligation related to a joint venture that the company has with the Discovery Network. So that gets us to the total liabilities of $3.5 billion. Now let's take a closer look at equity. Now look, I think that some people get confused at the equity portion of the balance sheet because it looks rather complicated. But there are really only three things that are going on in the equity section. Equity is, one, the amount that the company has raised by selling stock. Two, you add to that any profit that the company has made. And three, you subtract any distributions or money paid out to the shareholders. That's effectively what's happening in the equity section. So to understand this section, we just need to take the information that's given to us on the balance sheet and ask ourselves which one of these three buckets does it fit into. So let's take a look. The first thing that they list is common stock. They have $104 million and additional paid-in capital of $1.27 billion. That's the first bucket. This is the amount that the company has raised by selling stock. Investors have put in almost $1.4 billion into this company. Additional paid-in capital is sometimes called contributed capital in excess of par. You'll see that on some balance sheets. But it means the same thing as paid-in capital. You can think of it as the money, the amount that a company receives when it first issues stock. Now, retained earnings. This is the total amount of net income that a company has generated since its inception that has not been paid out to shareholders in the form of dividends or share buybacks. This is what we mean by retained. In Hasbro's case, retained earnings are $4.2 billion. So it's important to realize that this is not a pile of cash. The cash is the first line on the balance sheet, and it's only $1.8 billion. So where did the rest of the retained earnings go? Well, they've been reinvested in the business as assets. And now we have accumulated comprehensive losses. These are the unrealized losses that Hasbro has accumulated in other investments. So these could be things like joint ventures, foreign exchange hedges, pension plan investments. These are paper losses only, and they're not included in net income yet because they haven't been realized. So if nothing else changes, these losses will eventually be reported as negative net income on the income statement. These could also be a positive value, and they could be labeled as comprehensive gain. Retained earnings and comprehensive losses or gains fit into our second bucket. This is the profit that the company has made net of distributions to shareholders. Now finally, treasury stock. Treasury stock represents the value of the shares of the company has issued and then subsequently repurchased. So companies repurchase their stock for a number of reasons, including to increase the share price. And they can use these repurchased shares to acquire a competitor, or they can resell them if they need additional capital. And that is the balance sheet of Hasbro, which is one of the world's largest toy makers.